Welcome back to the Daily Journal. So we are reviewing the 10 a.m. continuation from yesterday's price action on NASDAQ. So going into the day, I was actually bullish for reasons that you can go see on the previous video where I spoke about the 6 a.m. continuation. Long story short, I'm basically looking at this as one large market maker model delivering from this high time frame PDA over here to these relative highs. That still may happen, and I said may happen because YM has completed that delivery. Okay, that's stunning market maker model. So that's Nasdaq may catch up, or depends if the high time frame trend stays intact. And for that continuation to happen, I would expect price to close above this inversion to increase the likelihood that price should expand higher and catch up to YM because there's a massive crack in the correlation. So let's stick to the New York session from yesterday. It was this candle here that I traded. So going into that session, let's just rewind the clock here. Of course, it's that candle that we are talking about. So going into the session, we had swept the previous day high. Right, so that candle confirms a reversal from this previous day high. And going into the 10 a.m. open, now at this point, YM had taken out the highs of that market maker model. So technically speaking, according to NASDAQ, NASDAQ has actually taken out those highs that are referred to on the 4-hour charts, right? The awesome highs. Consequently, price sells off. So at this point, I'm looking at this as a market maker sell model. So there's some liquidity down here. There's also a fair value gap over there, which price is very close to. Yeah, so here's the 10 a.m. over there. And what we can see is a 15-minute fair value gap. So this is an A+ model. Price has sold off aggressively. It's ripped through all this sell-side liquidity. And I'm looking for the 10 a.m. continuation once it trades back into this 50-minute fair value gap. And how I look for price to deliver from this 50-minute inefficiency to this sell-side liquidity and this inefficiency is via a market maker model on the 1-minute charts. So this is where everybody who's got the wrong bias starts looking for longs. Let's see how price trades. So this is the 50-minute charts over here, just to double check. And what I'm going to do now is I'm going to invert my charts because I predominantly trade longs. It's just easier for me to see. So I'm also just going to hide this and turn on. There we go. Okay, so now I can see there's these, relative highs here. This is an inefficiency. Liquidity inefficiency, same, right? So I'm looking for price to trade into this 50-minute gap. And I'm looking for SMT. Okay, so there it is, right? So let's have a look at what ES is doing. Invert that scale as well. And what I can see is that price is not traded into this level here, whereas ES has, NASDAQ has. So I can see there's, at this point, more SMT. So there's two SMT. There's high time frame SMT. There's also low time frame SMT. Right, so that's your SMT. There's another SMT in there, but I won't clog up the chart. So I'm just going to also just delete this. And it's at this point where I'm looking for price to close above this, which it does. It's at that point where I enter into the markets. Stop loss at this low, and then I'm targeting 2R, which lines up very nicely with our targets. So it's at this point where I'm keeping my eye on ES because ES has now taken out these targets. So I dropped to the 15 minutes on ES and I saw there was a target, a 15-minute target at about 867, I think it was. So I put an alert on that. So as long as that target wasn't hit, I was happy to stay in this trade. So I'm just going to move this to the side. So I was happy with the close of that candle, that being a reversal, and I'm looking for continuation. So with this low, having traded out of a fair value gap and then traded above, that would typically be my protected low. However, that high, as these highs, went and took out these highs on NASDAQ. So I was sticking to my bias here. I don't see price, trading to these lows without these highs taken out. So I stuck to the model and I patiently waited. And so with these lows over here, I can see price has expanded and now it's just consolidating. And so what I see is vertical highs. In addition to that, swing low, price is also traded into that 1 minute fair value gap. So it's just the same story, right? So I expect price to have a market maker model from this inefficiency to these highs. So this to me is just accumulation. So there's vertical highs here, here, and over here. And since that is an up close candle, I can use this last down close candle as another point to trade long. So I'm waiting for the candle to close above. And the moment it did, I then use this candle as my anchor points. I think I used that because I was adding to my position. So I just brought my stop loss to here, but I calculated my risk from the 0.5. And that's how the trade played out. So let's have a look at my journal. There's the 10 a.m. continuation. There's that trade. You can see I added over here on the close of that change state of delivery. And then also added to that trade there. Awesome, guys. Thanks for joining. If you've stayed this long, I appreciate you. Please hit like and subscribe. It really does help out. See you guys in the next one. Cheers.